Hey guys, it's Jordan with Cashflow AI, and today we're going to talk about zero DTE options. And what actually are zero DTE options? Well, they're options that expire the same day or today or whenever you're watching this, right? Because all options have an expiration date, and in most stocks, those options expire every 7 days or every single week on Friday. However, with SPY, QQQ, and a few other names, they have options that expire every single day. So every single day is an option that's going to expire as long as the market is open and running. Now, why do a lot of traders care about zero DTE? Why is there so much hype? Well, there's four key advantages. Number one, they're very, very cheap options. They're very, very cheap. You can get them for sometimes a few dollars, a few pennies if you want, up to hundreds, thousands of dollars as typical. But they're very, very cheap to get in, so very good for small accounts. You can see massive moves. This is the main reason people like them, because a few point move in a stock can result in a 100, 200, 300% move in a zero DTE option. There's no overnight risk. You don't have to worry about holding overnight or any news or anything crazy happening while the market's closed. And they're very high liquidity, okay? Usually, especially on SPY and QQQ, very tight bid-ask spreads, so it's very easy to get in and out of these exact stocks. Okay, so let's look at an example of QQQ at the money calls. So here's why they're so impressive, because if you're looking at a zero DT option, let's say we have the 350 calls on QQQ while it's currently trading at 349.20. Well, these zero DT options can be worth, $1.10. And if you're getting 100 shares, it's going to be worth $110 to get that option. Now, if you were to get one that's 80 days out, and this is kind of a random example, but 81 days out, right? And again, they have these every day. So you can go 70 days, 58, doesn't matter. 81 days out, it would cost you $16 for that same option, which is $1,600. So it's a lot more expensive. You get a lot further in expiration as opposed to getting zero DTE. Now, the other big point is that zero DTE options move just a lot bigger explosiveness compared to all these other ones. So, right, if we look at the QQQ, let's say, it's at 350 or whatever. Now, let's say QQ moves up $1. So it goes from 350 to 351. Well, that zero DT option that's at the money would move up by 45%. So you make 45% in profit versus an 18-day expiration or an 81-day expiration is only going to be 3%. 18 days, only 7%. So you can basically make a lot more in a much shorter period of time with the same exact move in the underlying stock, which in this case would be QQQ. Now, again, liquidity is one of the biggest things as well, because especially with further out the money or expiration options, they typically have a lot wider spreads. And so with zero DTE, there are tens to hundreds of thousands of contracts traded every single day. So for example, like a 350 call, we look at the ones today, there'd be 200,000 of volume versus 7 days out, 45,000, and then 30 days out may only be at 18,000. So in terms of liquidity, being able to get in with very tight spreads, zero DTEs are the absolute best for that. Now, if we take a look at an example on SPY, here's where the real advantage comes into play, right? Let's say SPY opens up at $422, and then throughout the day, it rips to $431, which is a pretty big move. But ended up closing under 430. Well, if you look at the zero DTE SPY 422 call, it opened the day at around $1.20, and it went up to a value of $9. Now, again, that's 100 shares of every one option, so that's $120 turned into $900 in 1 day. Versus if you just held, one share of SPY, you would have turned $422 into $431, making $9 in profit. So it's a huge difference if you're able to get a 9x return on the same move on the actual stock price. That's why these are so advantageous. Now let's look at another example, right? Let's say SPY is at, same thing, right? And we go up to 430, and then we go back down towards the end of the day. Well, here's the thing about options is that everything happens at expiration or when the market closes. So you could have an option that's basically worth pennies, $1, $2, or $0. And then in the middle of the day, because SPY just rips up, it ends up going to $1.20, so $120. So you can basically turn $1 into $120 throughout the middle of the day. However, if by the end of the day, SPY starts to go back down a little bit, or we go back below 430, or we close below 430, that option is going to be worth $0. So it's really important that you're having good risk management. You understand that at expiration is the most important part, because that's when the actual options are going to have the real value. Now, the other important thing is time decay. And this is an extremely important lesson you have to understand with zero DTE that a lot of people get wrong. So let's say we have SPY and it starts at 424 and towards the end of the day, it gets to 425. So at the whole day, it goes up essentially $1. And it could be back and forth, could be choppy when it gets there, but we start at 424, we get to 425. Now, you may have the 425 call, right, on a 0DT option, and it starts out at 90 cents, but then it goes down to 60 cents. And that may not make sense because, if the stock price is going up, wouldn't the option go up as well? And the answer is if you're getting a out-of-the-money option, not necessarily, right? Because you're getting an option that, in the meantime, is out of the money, and anytime an option is out of the money, it's going to decay. Even though one's in the money can decay as well, but out of the money is going to decay. And so you have to be very important and get, not just direction right, but you also need to make sure you get it right in time. And so typically, if you are expecting a small or slower move, you want to get a more in-the-money option. So a 424 or 423 call would have been a lot better, and you would have been able to see this graph go up. Now, scaling out is also really important because you got to understand, if you have $1, it's times 100 shares, so that's actually $100 worth of risk. So if you have 10 contracts, that's to be $1,000 of risk, right? And so it's really important that you can actually bank these out. You don't have to hold these until expiration. You can actually sell them in the meantime. So let's say you have 10 contracts at $1 and you have a stop loss at 70 cents, right? So the max you're going to lose on this trade is $300. Let's say it goes up to $1.20. SPY makes a nice move. You're up 20%. You sell half your contracts, right? That's going to bank you $600. Let's say it goes up another few more to $1.50. So now you're at $150 per contract. You sell 3 more. You lock in another $450. Now you've basically doubled your money off of your total risk, right? A lot more compared to your actual risk. And you still have 2 more runners. So if price keeps ripping and moving higher, you can hold on to those and hope that, you can make a lot more if price continues to move up. Now, stop losses are also really important because, like I said, you can lose your money very quickly when trading 0DT options, and partials are extremely important. So let's say you have, selling half at 20%. So again, you're in 10 contracts. It goes up 20%. You sell half your contracts. Well, now you locked in $600, and now you can move your stop loss a little bit higher towards break even because you already locked in some profit. So if price ends up coming back down, which in 0DT options they typically do, you can now sell it at 80 cents with the remaining 5 contracts and lock out break even. So now you have that what we call a break even trade. No matter what happens, you are going to make money on this trade. You cannot lose money as long as you have that stop loss in place. Now, there are a lot of big risks with 0DT options, right? Volatility is extremely important. It can really cut both ways, right? So again, just like I said before, if a stock is moving very slowly up and it takes a long time to move up, those options, even though they're calls, could still go down in value. And that's basically because of rapid time decay. So even if you're right, you could still lose money because of theta. And minute by minute, it's also extremely exhausting simply because of theta decay. You know that as every minute goes by, even if stock stays extremely flat, you are going to be losing money from theta decay. So have small position sizes, make sure you're managing your risk early, and respect your stop losses. And honestly, not many people should be trading 0DTs, right? If you're someone who can't watch trades, you have not great discipline, right? You don't have any stop losses. You want to be able to set and forget. Your complete brand new options is probably not the best for you. It can be a good fit if you can execute very quickly. You're very comfortable with your risk. You can respect your stop losses, and you can handle your stress as well. Really, really solid best practices. Position small, okay? Predefine your stop, set scale out levels, know your max loss, take partials, okay? Again, not financial advice, but typically in my trading, that tends to work really well. And try and be flat by close. Don't try and hold overnight. Obviously, you can't with 0DTs. But you want to make sure that you can trade them in a way where you're not stressing out over the night there. So very simple key takeaways: cheap and fast but unforgiving. Those are basically 0DTs for you. Okay, you can make a lot very, very quick. You can lose a lot very quick. So that's why you need to have very good risk controls and be very good at scaling. And again, last thing that's really, really important, you don't have to just be right on time. You also need to be right on direction, okay? So just because you're right on direction doesn't mean you're going to make money. You have to be right on time as well. That's why 0DT is very hard, and a lot of people get killed is because the move may happen, the one that they're expecting, it just may take the entire day for them to get that move, and by then the options become basically next to nothing. So Hope you guys did enjoy this video. I have a brand new video in the description as well that I'd love for you guys to watch. And go ahead and subscribe down below if you like this type of content. I've been trading 8 years, showing everything that I know over, insights, tools, tips from trading. So subscribe if you're interested. Check out the video in the description. I'll see you all in the next video.